Welcome to Risk Reward. I'm Patrick Draut. Kyle, Friday, 9 a.m., Chattanooga, Tennessee. We have a freight futures marketplace open. What can we expect to see?
I'm Kyle Lintner. Patrick, open an account and I'll tell you.
Okay then. Welcome to the Rundown, where we highlight some of the top stories affecting the freight futures market. Kyle, national volumes are back to their highest levels since December of last year, yet we're not seeing pricing kind of follow that. Can you kind of maybe delve into exactly what we're seeing here?
Sure. Simple. It's capacity. There's more capacity now than there was in December, so we don't see the prices following the volumes higher. Simply put, we have more trucks chasing less to do. Prices aren't going to go with.
Okay, so are these trucks that came into the marketplace in 2018 kind of chasing those high rates that we were seeing in the summer of 2018?
Yeah, anytime there's a market, we have an equilibrium. And as rates go higher or lower, that dictates all of the players in that market. So as we saw rates move higher in 18, more capacity was added to the market to get those prices back to levels that we were more comfortable with. That capacity has now shown up, and that's showing up at a time where we don't have the volumes that we did previously. So even though volumes are stronger, they're not as strong as they were in the past. Additionally, we have excess capacity, so that capacity helps tip some of that supply equilibrium back to the shipper's favor.
So talk to me for a little bit on how we can see prices begin to elevate from what are seemingly lows that we haven't seen since 2016.
Well, we could have less trucks, or we could have more volume. Those two factors are what's going to dictate prices for the most part. Outside of any other micro level things that could happen in particular areas, we're always going to have simple supply and demand, which will be loads and capacity. So if we see capacity drop off the map or we see volumes increase, then we'll see prices follow one way or the other dependent on those two factors.
Likely we're going to see that seasonal shift of May and June where we're going to see the volumes increase. I don't know if you want to call it barbecue season, you want to call it 4th of July season. Let's talk about that a little bit.
We don't know. Yes, there's the seasonalities, whether it be produce, charcoal, outbound LA stuff. Anything that disrupts the current patterns will alter prices somewhat. Typically around this time we begin to see volumes ramp up. As it stands, there's definitely enough capacity to get the trucks in the right places for those volumes, so prices should be somewhat muted. If there was a significant increase in outbound volumes, we would see prices move higher if the capacity was not in those places. If the capacity was in the necessary places, it would be very similar to what's happening right now, where we see tender rejections at all-time lows, even though volumes are returning simply because there's trucks everywhere and everyone's looking for a load to do.
So we see tender rejections that are at all-time low. Additionally, we've seen prices deflate, except we got kind of anomaly behavior in terms of Atlanta to Chicago. Maybe you could walk us through exactly what we're seeing with Chicago to LA.
The one market that's holding firm, right?
Yeah.
I think it has to do with the fact that when you're in Chicago, you have several other markets in the Midwest that you can go to with strong rates and strong outbound volumes. So it's Bloomington, Columbus, Grand Rapids, whatever it may be. These are manufacturing areas and they're warehousing areas. And trucks in the area are hesitant to leave because they know that they can stay around here and they can pick up another load quickly and they can pick it up at an advantageous price.
Now, do you think the trucker, the carrier, has that actual thought process, or do you think this is just years of behavior out on the road?
I think there's a little bit of history ingrained with the way people are doing things. There's somewhat of probably a psychological Pavlovian response to just high rates, and I know what I'm getting when I get into Chicago.
Okay, now also I know that you like to throw out this stat. 91% of all carriers are 10 or less trucks.
Yeah.
Okay, so what we possibly could see, I guess, in my predictive nature, would be that we could see some insolvency happening in 2019 due to these low rates, and eventually it's going to reach a point where a trucker or carrier says, I'm just going to sit idle as opposed to move freight at a certain price point. Maybe if you could walk us through that a little bit too as well.
The American Transportation Research Institute said that the average cost to run a truck is $1.69 a mile. Now, that is an average. That's not what everyone's doing it at. So people who are not as operationally solid as some of the larger carriers perhaps have an average cost to run their truck maybe at $1.70, $1.75, maybe even $1.80. The latest DAT report for national rates put the average at $1.87 per mile. So now we're starting to get into an area where truckers might be running their trucks at very, very small profits. They might not be running them at any sort of a profit. Some of them might be running them at no profit. Now they begin to face the choice of letting the truck sit idle or worse, possibly facing insolvency. Either of those two options lead us to decreased capacity.
Let's talk operationally here for a second. If you were a truck driver, what would your 60-day plan be, and what would your 2019 plan be in terms of how you navigate across the continental 48?
Right now, I think if you can weather the storm of where we're at and you can keep yourself afloat, you might not be making a ton of money, but you're making enough to pay your bills. I would try and move forward with that, thinking that things probably will pick up from here. This should be the lower end of what we see prices for in 2019. So if you can make your company work or make your truck work at these depressed levels, everything from here on out should be done at a higher rate and then should be done at a more profitable rate for your current business.
K-Ratio is an NFA member firm and CFTC registered CTA. Our dedicated team of professional traders, freight industry experts, and data analysts can guide your company through the complicated processes and applications of risk management. Within 30 days, K-Ratio will provide access to the market, the tools, and strategies to successfully hedge operational risk in the freight futures market.
And now for our favorite segment, Over Under. Kyle, DAT National Average, November, $1.70. What are you feeling?
I want to say over. I know prices are down generally from last year, but with seasonality into it, I think we exceeded. I'm going to go above.
Yeah, I'm going to have to echo your sentiment on that as well. I feel like we are going to have some capacity constriction over the next 9 months, driving prices higher. So I'd like to see that. I think we're going to be over $1.85, as a matter of fact.
Risky. All right, Pat, I'll ask you. U.S. National Outbound Volume Index, 10,000. April 1st, are we over or under?
You know I'm forever the bull, Kyle, so I am taking the over. We are currently over that 10,000 mark right now here in March, and I feel like we are in store for a bit of a rally here.
Yeah, I agree. We're kind of treading water right around 10,000, but I think it holds for the next week or two.
Okay, and now on to June, LA to Dallas, over under $2 even. What are we thinking here, Kyle?
I'm going to say under. I don't think we're going to have the same level of volume we had last year from the Asian cargo traffic that came in from LA to all points outbound. So I think where we are now to where we'll be then, under.
Yeah, once again, we agree, Kyle. Fortunately, that lane, LA to Dallas, has kind of seen its best days. And I think moving forward here, we are going to see some prices settle in, and they are going to be under $2.
I agree. Thank you for watching our look at the freight market. You can visit us at k-ratio.com or on our LinkedIn page. For Patrick Draut, I'm Kyle Lintner.
Like and subscribe below.